In crypto news today, CZ, the former CEO of Binance, has been sentenced to 4 months in prison. Thank goodness the banking system such as JP Morgan Chase & Co., with its net annual revenue of $160 billion in 2023, is not doing things like this, not doing things like CZ did. It's great to know that JP Morgan Chase & Co. didn't defraud precious metals and US Treasuries markets through schemes. Oh, wait a second, it actually did. It paid a $920 million fine in September of 2020, but the CEO of JP Morgan Chase didn't go to jail. Why? Oh, because this was an isolated incident. Hang on a second. No, it's not. When we look at the violation tracker of JP Morgan Chase & Co., we can see that there's been 277 incidences totaling $40 billion worth of fines. Oh, hang on a sec. I thought the finance industry, the banks, were supposed to be squeaky clean. After all, we give them our money for safekeeping. And it's terrific to know that we can go into any bank and just withdraw anything we want, because after all, it's our money. Oh, hang on a sec. No, we can't do that as well. The bank branches are closing. As a global family, I'm just talking about Australia, but this is happening all around the world. People just can't get their money out of banks. We're getting more and more stories in the media about people just being unable to withdraw cash from their banks and being given the third degree on what they're doing with the money if they dare to withdraw any money from that bank. We put so much faith and trust in banks, but banks are not squeaky clean, and they never have been. But of course, the banks are getting much better. When we look at March 15th, 2024, that's not too long ago, JP Morgan fined nearly $350 million for inadequate trade reporting. Oh, are they getting better at all? But of course, when crypto enters the space and offers people an alternative to the banking system, they've got to make those people pay. The banks say that digital currencies such as crypto are just scam money, but that's not the case. Crypto is all about owning the network layer inside the internet version 3. And what we can see here is that there are a lot of proof of concepts going on with central bank digital currencies. The plan is that we will have no more paper money. This is a global phenomenon, and we can see inside Australia the Aussie dollar from a wholesale perspective is in proof of concept. This was being led by National Australia Bank, and one of the really interesting things, the NAB is crypto hostile. But at least we can rely on our unelected officials and our elected officials to keep our money safe, or can we? Gary Gensler has lied to Congress about Ethereum. It was just a matter of time until Gary Gensler came within his own crosshairs. Just months after a federal judge sanctioned the SEC enforcement lawyers, causing 2 of them to quit their jobs for lying to the court, new evidence shows that Gary Gensler himself misled Congress. Will this lead to Gary Gensler getting the long-awaited boot where it fits? Please let me know in the comments what you think. Misleading Congress is not the smartest thing to do. In other news, Bitcoin processed 1.6 million confirmed payments within 24 hours. Following the launch of the Hong Kong ETF, spot ETF for Bitcoin and Ethereum, Australia's top exchange may approve a spot Bitcoin ETF this year, which could see $3 to $4 billion worth of inflows. Even if Gary Gensler gets his way, the Hong Kong ETFs will be unfazed if the US declares ETH a security. According to the block, US spot Bitcoin ETF outflows continue with $51.5 million exiting. But when you consider there's been a $53 billion haul for spot Bitcoin ETFs in the US, well, that's not much of an outflow, is it? And Australia could get its very own by the end of 2024. The bankers and the financial industry don't want to miss out on those really juicy fees. Oh, but they're doing it for you. Actually, they're doing it for themselves. How is the crypto market looking right now? In the past 24 hours, we've seen Bitcoin come down about 5%, ETH down a little over 6%, and Solana bleeding out a little over 7%. The greatest gainers in the past 24 hours, Atom, CRO, Optimism, oh, it's very optimistic, Starknet, Tron shining in the darkness as it usually does, and quite a few stablecoins. That's not surprising because it means there's been a wide-ranging sell-off. The greatest losers in the past 24 hours, leading the top of the bottom of the pack, we see Audi, Arweave, SEI, LDO, Pendle, Stacks, CKB, and Athena. With the Bitcoin spot ETFs, we can see over the past 5 days we've had net outflows in USD. And we had a pretty big ramping up in the past 24 hours as Bitcoin came down, and it came down pretty hard. I'd like to thank everybody for their phenomenal comments on yesterday's video. Just a beautiful community, and if you're new, please subscribe. We'd love to have you here as part of our global family. We have one of the best communities on YouTube. You can see right down here above 57,000, there are a lot of longs placing their stops. However, what we also understand, the shorts are accumulating just under the $63,000 level. How price is always moving is in a wave-based function. Price moves down and up all the time. This is just the way it goes. Now, why does it move down sometimes? Well, if you've been doing the cheat sheet, you've been noticing that the yields are spiking. This places a lot of negative momentum inside the stock market as well as all risk-on asset classes. It also smacks gold around and silver. Turning to the 24-hour liquidations, there's been about 380 million, and basically all of it, pretty much all of it, was a long liquidation across the past 24 hours. But when we look at the last hour, the shorts are starting to get whacked, and that's what you'll find all the time. It just goes between shorts and longs and shorts, but always pinned to structural resistance and structural support levels. The crypto industry felt that the book would be thrown at CZ and therefore that Binance would falter because the sentencing of CZ was much less than anticipated. Binance Coin has been doing well. In fact, the shorts are getting whacked. One thing to note, Bitcoin's price gravitational pull is impacting all of the alts. You can see just how plainly it works with Ethereum. What about Solana? Just dead on. And we see this in capitulation events. Everything starts to synchronize back in. This is a really good thing because once you synchronize back in, the market blows out all the trash and we can start partying again. XRP is looking quite intriguing at the current time. Go XRP. I believe personally this is one of the best times to be involved with crypto and Bitcoin especially because Bitcoin has been retracing. This has created so many opportunities in the alt market. If we go back a couple of months, we just literally couldn't get into alt projects. They were so expensive. Fortunately, a lot of the entry prices have halved now. The key is, can you take advantage of this or have you lost faith? There is no question that Bitcoin is going to the moon, and you know if Bitcoin goes up, the alts are going to follow. It is that simple. Now, how do we explain Bitcoin's price momentum over the past couple of days and the past couple of weeks? Let's pop on the indicator. We know the price is always moving between structural levels. If we know what they are, we know where price is going. For example, just a little above that 66,700 area was a major confluence of structural resistance levels that Bitcoin just simply couldn't break through. If it's not going above, where's it going? If it's not doing this, it's going to do this. It's going to come down to confluences of structure. And you can notice these negative fresh air gaps, they're vicious. Because if you get a sell-off, price can move down very, very quickly and catch a lot of people unaware. They can also move to the upside very, very quickly as well. This kind of volatility throws a lot of people out, but it doesn't throw us out because we understand how the markets are structured. What occurred around this $62,000 mark, when we came down, we just sliced through it. That meant it was going to have some safety nets around 61,300. But if we lost those, we had a negative fresh air gap down to 59,500, where it could bounce from. And that's what it's doing currently. It's bouncing. If you've been doing your cheat sheet or you're in the service, you would understand that the yields have been exploding higher. And as the yields explode, they just pull the market valuations inside the stock market down. But they also place a tremendous amount of negative price momentum inside the crypto space also. There will be a time where Bitcoin and the yields and crypto and the yields will move in lockstep. That is, if the yields are going up, crypto will go up. But we're not there yet. If you understand where the structural levels are, you can make your game plan accordingly. For example, you knew that if the $62,000 mark was breached, the next level was around 61,300. The next level, 59,500. These are safety nets. They won't just capture price like a brick wall. They'll come down, hit it, and rebound. You can see this testing occurring in there. I'll just zoom in to show you. We can see as we lost the 62,000, the next area that we were going to consolidate in and around would be the 61,250 mark. And if we lost that, we'd be coming down to the next structural level around 59,500. This gives you so much certainty because you know if you violate a level, you'll know where the next levels are and you can react accordingly. What we know is this: if we can get up to the 62,000 mark, we may consolidate around there a bit, but if we can get over that 61,250 mark, we put our sights on the 62,000. If we can get above that, we put our sights on the 63,500. But what happens if it goes the other way? And that's good thinking, because you need to understand the price, as it always moves in a wave-based function, is always going up and down, and you can benefit from that. We can see just around that 59,500, there's a level of structural support that has held fairly well. It came up, and you see that retest, and it went for it. It's being rejected now by that 61,200 mark. Okay, so if it comes down, we expect the first stop to be there, and much stronger support around the 58,550 mark, and then at 58,000. A lot of people think that there's only one level of structural support or structural resistance. When you look at Bitcoin, which has been trading since 2009, that concept of only one level is just crazy. It's nuts. Of course there are more than one level. There can't be just one level. And if you would like this indicator, just pop across to CTKSMethod.org to pick it up. Post-halving, we've been talking about it all the time. We expected negative price momentum. And I must say, I have been accumulating like crazy across my different accounts. These big spike downs are absolutely juicy. We want to partake in those. And if you've got a long-term holding bag, you would have wanted to take advantage of the 50% off that the alts have been giving you. When we think from a retail perspective, we just think it's going up forever. And many people said that, only up. It's only going to go up going into the halving. But we know the mechanics of the halving are not that simple. Often, institutions just trap people on the wrong side of the trade. They're trapping people into the negative side of the trade now by selling. Up here, they were trapping people into the buying side. Go with the institutions and don't go against them. Know that they play a lot of games, and we've seen some of the games some of these big players play. Just move with the whales. Since the halving, since the peak of that high in the halving, we've come down about 7.5%. Or maybe I'll just draw it to this bottom. That's a bit better. That makes it around a 10% drawdown. How does this compare with past post-halving price action? And remember, I'm leaning in. I'm not running from this. I'm not taking a break, and I'm not selling in May and going away. That's for amateurs. In the last halving, the 11th of May 2020, we had a good piece of positive price appreciation, nearly up 22%. And then from that peak down, we came down about 13.5%. Just remember, price is always moving up and down all the time. If people were getting out in May of the past halving cycle, they got out at exactly the wrong time. Be careful of these blanket statements. They're generally very naive. One of the best things that you can do is to buy on red as an investor and just keep on buying on red. Each time it comes down, it's going to be life-changing. And if you're trading as well, well, that's an absolute superpower because trading can make you very, very wealthy. But the combination of both is just a knockout. And just to let you know, I do have trading accounts that I just get in and out of positions, and I've got long-term hold accounts that I will sell as we approach the peak of the bull market, and that's a way off yet. A lot of people unwittingly just get caught into the institutional brainwashing, and institutional brainwashing is not there for you. I can tell you it's there for them. Remember, sell in May and go away and miss out on a 23.5% increase. Good for them. That's going back to the 2016 halving. And when we saw the 2016 halving, very different market conditions and not the institutional adoption we have right now, or the institutional manipulation. We saw a very big push up of a staggering 9%. But then it really hit the fan and came down 32%. But if you bought around then, whoa, baby, that's the way to do it. Do not be afraid of capitulations. Lean into them. These capitulations are the best things that you could ever get into. A lot of people simply don't understand that you can make life-changing wealth on capitulations. But of course, you need to know what you're doing. What typically occurs in a capitulation, people will get absolutely and utterly phased out. The overwhelming negative price action will just force them out of the market. They'll say, I'm done. I'm out of here. I can't stand it anymore. I'm selling. And at that point where you feel you're just done and you need to get out, that's the point typically where you should be buying, not selling. Over nearly 4 decades inside financial markets, what I've found is these capitulations typically repair, and they can repair very, very strongly. We can see we got this capitulation here, and this is just before the 2016 halving. A lot of people would be saying, oh, fantastic, the halving is coming, the halving. What the heck just happened there? Oh my God, I'm going to sell everything. Oh no, it's repaired. I'm going to buy everything. Oh no, it went down. I'm going to sell everything. This just doesn't make sense because it will just bleed your account out. But if you can invert your thinking, if you say, whoa, I'm so excited. Look at this capitulation. I'm going in. Wow, fantastic. Wow, 30% return. This capitulation came down 32, but it came back 35. And you'll note that it didn't even raise up to this level. This is why you want to buy capitulations. Do not run from them. Buy them. What you will find when the markets go red like this, they're fantastic opportunities to get into projects that have been too expensive in the past. One thing that people often mess up on is that they seek to buy the very bottom because they're taught by the institutions. Rule number 1, never make a loss. Rule number 2, refer to rule number 1, says Warren Buffett, who buys on the red. Please do not misinterpret the greats of investing and trading. When they say specific things, what they're saying is potentially something else. When Warren Buffett says, don't lose money, he's saying, don't sell at a loss. If that is your strategy, and it always depends what strategy people apply. For example, if you're a Forex trader and you're highly leveraged, hey, guess what? You better sell when it hits your stop loss or you're going to wipe out your account. You can see one piece of advice doesn't apply to everybody, and buying the dips may not apply to you, but getting in on capitulations is absolutely and utterly incredible. It is life-changing when done correctly. Inside the masterclass, I always talk about continuously reliable signals. This is a very important thing to understand. One of the best signals that you can ever get is Bitcoin's gravitational pull on the alts. If you see Bitcoin coming down, don't expect that your alt is going to rally. Don't expect that it can bypass Bitcoin's gravitational pull, because it can't, especially if you're in the major alts. Some of the smaller projects, especially when they're listing, can do incredible things, but just be aware that in the end, all alts follow Bitcoin's gravitational pull. That is a piece of power right in your hands that can pay incredible dividends over time. Have a great day or night ahead, my friends, and remember, capitulations are for buying, not for fleeing from. And you'll find that what happens when you can go into a capitulation like this and not run from it, you are elite, and that's what I want you to be. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.